Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's make the fast update on the gold market because not too much to talk about today. On the daily chart we do not see really big changes at all, so market still stands in the same range. This was open on Monday here. It was yesterday action, and right now stands flat. So the price and targets that we have discussed previously still stands the same. Market keeps bearish context as trend by the MACD stands bearish here, and we are watching for downward continuation in the medium-term perspective. Today is the Fed statement, and hardly we could expect some volatility before Jerome Powell will come with its speech by the end of this session. Market is now turning to some kind of the waiting mode when they just wait and see what will happen on the Fed statement. But in general, as we said today in the report on video on the forex market, it really could be big surprises because we in the video on the forex market we're trying to understand what has happened, why euro has shown the upward action yesterday, the same as in gold. So our suggestion yesterday could be upward breakout of the intraday patterns and market control leg up also has been completed. Not maybe as strong as we talked about, so these targets that we have specified has not been hit yet, but still direction was correct, and indeed market has shown some upward action. And we think that this could be due to some nervousness on the market, and currently we see big change in the sentiment. So in the weekend it was 95 probability of expectation that rate will be cut for 25 points today. Currently, at this moment, it stands 55 on the 45%. So it has diminished approximately 2 times. And it means that markets are prepared for some more hawkish statement from the Jerome Powell, but currently nobody could tell in what degree this will be, the hawkish comments will be, and what particular hawkish will be. And that adds some uncertainty, makes market nervous, makes market to protect their positions, investors to protect their positions on the common uncertainty. So it could be some position closing and so on. So, and that's what particularly we see on the gold market as well. So if on the daily chart we do not see something really outstanding, on the 4-hour time frame chart, what we see, the upward action has happened, but it was not too significant. The market currently stands in a situation that keep both directions. So if you have taken the short position on this gap open on Mondays, we said, and yesterday we call you to move stops to the break even. This upward action yesterday makes you no harm, and actually you could keep the same position with the break even stop. So because you're possessed on the downward action, and if indeed some hawkish statement will be, market probably will drop and close this gap. So despite this downward action, you can see that's part of the unfilled gap that exists in the market. Also, overall price action still holds the butterfly, possible butterfly. And in general, if you take a look at this pattern that we have, you could see that actually we have the triangle. And triangle is some kind of indecision consolidation that keeps valid both directions. Because narrowing swings inside of it, you could easily suggest and imagine as the downside butterfly, or you could easily also imagine the possible upward breakout here. So that's the specific of the triangles. When markets starting to form narrowing swings, forming the triangle, you easily could suggest the both directions, and patterns could be formed in both directions. So currently, if you have the short position, you could keep them, and you think that market will drop. It's possible because yesterday we also call you to take at least 30-50% of the profit just to get something on your entry, because it will be some upset if, for example, you have taken position here and grab some profit, and now market will show acceleration, you will be out on the break even. So with the empty hands, that's also not very good. trying to get some at least minimal profit on any trade. That's actually the reason why we are trading, and that's the things that we talked every time. So when you take the position, market reach the minimal target, take the half of your profit, move your stops to the break-even on the rest of the one. That will let you to stand increase your assets and to finish any trade with some profit. So if market will fall in your direction, you will get more on the rest on the second half of your position. If not, you will get something. So your trade and your current entry will not be in vain if you will be out by on your stop order. So on the long side of the market, the same thing stands. So take a look. That was our wedge pattern that we discussed yesterday. Indeed, the breakout up has happened. So if you have long position and you suggest that market will continue to move higher, you also now could move stops to the break even and see what will happen. So currently, it's nothing that we could do because market provides no action. So it stands flat and keeping the balance at the same level. So here short entry was, that was long entry, and depending on your view, you could keep your positions because currently both positions are valid and everything will depend on the Fed statement. Take a look that market stands in the range of the gap. So that's the top of the price open on Monday. From this low, was closing on Friday. This is actually the range of the gap, and you can see market has tested the upper border of this gap and turning down again. So let's see what we'll get at the evening when Jerome Powell starts to speak. My suggestion is that chances that we will get more hawkish policy are greater, and that corresponds to the idea that the gold probably should show downward continuation, and actually it corresponds to our longer view, the daily on the weekly chart, because we're considering right now the possible downward continuation. So, but since we have stops at the break-even on any hour trade, as the bears have stops to the break-even and bulls have stops to the break-even, so we could freely and easily just watching what will happen.